All right. So yeah, like we think about this candle three, right? We moved into the bearish fair value gap. We were obviously looking at that as um our key level to get hit before we started moving lower, right? And then we were looking for that candle two that reached into that bearish fair value gap to close back inside candle one to give us confirmation that candle three and maybe even potentially candle four would be expansion lower. I saw earlier, Sneak, you mentioned that you and your friends kind of think maybe 80K is doable. I also think so. Like for me, this is the ultimate draw on liquidity is our sell side. Um, so I also think the same thing, but I try my best to not like pay too much attention to the overall target and just trying to catch the moves in between, right? Because even if I caught a trade here, I'm not usually holding it all the way down to here. I'm usually taking the trades in between. But I definitely think that that's doable too. Um, so yeah, like I said, this weekly three, candle three, right, in the swing point, we called out a trade from there, right, which was this one, right? We're inside that third weekly candle that we expect to be expansion, and it was. So anytime now on the daily that we move back into a daily bearish fair value gap, I'm looking for that same thing. Let's take out candle one, and then let's close back inside of that range so that candle three and candle four can expand lower into this ERL swing low, right? And that's what's happened. So we have 2 hours left for this daily close. If it closes like this, then I'm probably gonna maybe either wait or flip to the opinion that we're going for this high inside of the fair value gap because we would be getting a daily inversion, right? Um, we don't necessarily have to clean up all these lows. We could reverse just from taking out this low here. But I'm a little bit skeptical even though it is kind of worth noting that indices are at all-time highs, right? Like if we go to NASDAQ, I mean, we're at all-time highs, right? So, oh, well, almost. Not quite there yet. Any of these? Nah. We're just very close to it, so anytime we're really close to all-time highs, um, I'm usually pretty bullish. So what's good for indices is good for crypto because they're both risk on assets. So yeah, if we do close above this today, I'm gonna kind of chill on shorts. Obviously, my target was already hit here, at least the one that I called out. I was potentially waiting to see if maybe we would start to reject off of this daily fair value gap. Um, but so far, doesn't look like it wants to budge. So we've got that big move into it, and now we're just waiting for either a close. And I mean, there's still technically time for it to still reject and go lower. But as of right now, it's looking like a pretty strong bullish reversal candle. So I don't want to be prideful and maybe try and keep trading this, especially when we already caught our candle three on the weekly, right? So sometimes it's just better to wait a little bit for some clarity. So let's see what the close does. 2 hours, and then we can probably revisit it tomorrow. We'll take a look at ETH too. Let's clean up some of these notes. Anything that's not really useful to us right now. So we have this fair value gap on the daily. So we took ERL here, right? Where should price go after taking ERL? It should go to IRL, right? Which would be here. So I would be waiting kind of like that time when we were making those call outs on Sol where I was like, yeah, I'm just honestly waiting until we get into here to see what happens. That's what I'm gonna be waiting for on ETH. Nothing special. Sol, I still think like, I mean, I would be very surprised if we did not take out these lows. Um, Let's see, let's map out the premium and discount. Let's see maybe if we can find out where we're heading on here. So probably these two fair value gaps potentially, but that's like well, I guess it's not so much higher, but it's a pretty significant move higher. So, um, yeah, if we move up into here, I'll be cautious of shorts in in these areas. Right now, if we do get that inversion though, and maybe we create a fair value gap, we could probably maybe look for longs. But then again, like I don't like trading when I see relative equal highs or lows. I don't like going against it. I would rather trade in the direction of them as opposed to away. Um, Especially because I don't think any of the other assets took it out. Yeah. So none of the assets took it out, therefore that makes me a little bit more bearish than I would usually be. We talked a little bit about gold just right now, but pretty much our plans all the way back from the 21st. I mean, they've been playing out pretty nicely. Like just every single 4 hour fair value gap has been really nice support higher. So um, there we tap that first TP level. This zone, I usually expect retracements or reversals. So if we can create another fair value gap, right? So we would need another 4 hour candle to form. Uh, and we move back into it, I would like to take it just kind of like before. Silver is lagging a little bit, so probably good for longs right now. What are we moving off of? This daily volume imbalance right here, right? These volume imbalances. So we'll talk a little bit about volume imbalances just because I also see what's his name? Is it Benny? I see Benny posting about volume imbalances. So I think we kind of trade using the same language. I don't know exactly his exact strategy, but um, we're talking the same language. So this volume imbalance, essentially what it is I want you to think of it like a fair value gap, except it's not when candle 1 and candle 3 don't touch. It's when candle 1 and two's bodies don't touch, right? So usually we're using the wicks, right? So if we're annotating a fair value gap, we would say there's candle 1's high, candle 3's low, the gap between them, that is the fair value gap, right? But with volume imbalances, we're saying from the close of this bullish candle's body to the open of this bearish one, there's no body in that area. Therefore, it's going to be a volume imbalance, right? And so we could use the exact same strategy that we've been talking about, right? So from daily, we would jump to 1 hour. When we tapped into that, what are we looking for? We're looking for the first inversion available to us. So it would be this one right here. And again, you don't necessarily have to trade the inversion itself and just instead take the information away from it that it's signifying a break in market structure, right? And when we get that, we can start reliably telling ourselves, okay, it's very likely that the sell side of the curve is done, and now we're in that buy side of the curve, right? Even though it doesn't look as pretty, looks a little bit messy, um, right? Because we came all the way back down to take out this low. And that's that kind of turtle soup trade that we were also talking about, right? Where we take out a low, we reject, and we start to move higher. Um, so I do think that we're probably moving into here. We have relative equal highs here. So I think longs on silver look pretty good. So we'll leave that for the notes later. We'll add this inversion in. Right? We'll make everything look pretty later. Like annotating the names and stuff like that. NQ, so for NQ, I thought maybe we would drop down a little bit more into this gap, and I was looking to trade it higher, into here, but I think it was a 4 hour gap. Yeah, yeah, so I should have been on the 4 hour because after this move up, there was another opportunity here, Remember, guys, like all this repetition uh, is really good because we're just looking at the same setup, right? With a 4 hour gap, right? What printed in? A reversal candle, right? We got our candle 2 closure back inside of candle 1, right? And then what did candle 3 do, right? Candle 3 expanded. So there was a trade opportunity in here. We could have gotten down to the 15-minute, right? And pretty much this move higher is what we would have been looking to catch. But yeah, I still think that NQ is probably booking it to these highs. Obviously, we're not going to get there in one straight shot, but I think all-time highs on this are inevitable. Any requests or anything you guys want to look at before we start getting into today's kind of lesson? I saw somebody talking about pump again and also hype. Oh yeah, there she goes. So this is like one of those instances where, like we had this plan that if we inverted above, that we would like to go long. The candle is going to close in 2 hours and 40 minutes. If the candle hits these highs in that time, then I'm not even really going to be interested in longs anymore because that's my draw, right? And remember, I told you guys, whenever you see equal highs like this, just watch what price does, right? Even though it went lower, once it starts going up again, I already know exactly where it is that it wants to go. It wants to go here, it wants to take out that liquidity. So if we close and we don't hit this, then I could look for longs. I won't necessarily be doing that, but that's what I would do if I was trading this one. Let's check out hype. Yeah, so pretty much what we thought on hype, where we just took out these lows, we inverted, and then we just, I mean, I didn't think it was going to be a perfect straight shot like that, but yeah, whoever called that one out, really good call. Like I said, equal highs again. Look at how price just fucking straight up like runs to that. These are the kinds of trades that I really like taking. Um, Another good example, it's kind of old now, but uh, back when I was trading the Trump coin, like even what's it called? My annotations are still here. I hopped in on I think it was maybe a 4 hour gap down here. Let's see, just because it's good review. Yeah, I entered off of this 4 hour IRL, right? We have a lot of relative equal highs here. I took some off there, but ultimately I was saving my large TP for that price right there, right? And I mean, that's a pretty monstrous move. And I had leverage. I had like maybe like 10x or something like that. But yeah, so if you guys see those in the markets, right? Relative equal lows here, price booked it, right? So that's what I like to look for when we talk about equal lows, equal highs, and stuff like that. But yeah, what was the other one? Do we look at all of them? I mean, I don't think even anyone cares about near anymore. Yeah, I mean, it just does not look good at all. No, oh, Zcash is another popular one. What were we looking at here? Okay, we were looking to see if we could sweep this low, and we didn't. We closed below it, so not interested. Even though it looks like it's giving a decent move right now, it probably will move into here, but honestly, I would just stay away from this one. All right, well, with all that, H bar. Okay, let's look at H bar. Bro, it's such an insane chart. They had like I don't know or even remember the partnership. It was with like, I don't know, it was like with BlackRock or something. I can't even remember. But that was this right here. Um, H bar, I mean like just looking at the weekly alone, like it looks actually terrible. Um, So I would pretty much just be following what it's been doing, right? I would be looking for short opportunities. Remember how our setup goes. We move into the fair value gap. We're looking for that candle 2 closure, right? Back inside with a reversal candle. Look at candle 3, look at candle 4 into this ERL. Perfect. So I would be looking for kind of the same thing. Move back up into here. Maybe even here. We'll have to see how the week ends. I don't think it will leave that gap, but it's possible. But if we move back into here, then I would be looking for short opportunities to take back into that low. Right? And you can kind of see where we're kind of forming that market maker sell model where we accumulate, we move up, get the smart money reversal, and then we start to move down. Don't know if it will happen exactly like that, but that would be my guess, just based off of what I see on the weekly. Any other coins or anything like that, guys? I know I went over the main ones. No one really cares about Forex here. Yeah, gold, silver. I don't think anyone here has been trading oil. All right, cool. Well, with that being said, if you guys have any requests, go ahead and type them, and if not, we're gonna start with the lesson here. So again, all of the things that we're learning, they're kind of being layered on top of each other. So when you guys actually start using the concepts, you're not just using a concept, but you're blending the different concepts, right? So what we're going to be looking at is market structure breaks versus sweeps. Okay. So whenever I'm kind of teaching a concept, I really like to have it where anybody who's listening in or anybody who's trying to learn it, they can answer three important questions, which the first one is, what does it look like? Um, like being able to identify the actual signature itself. Um, why is it important, right? So kind of telling us what is the significance of this signature and how do we use it, right? Which is obviously how can we practically use this signature to either help provide us with an edge or, you know, simply said, how to make money using it, right? So market structure breaks are when we close above a swing high with a candle close, right? And this is kind of why we went over the anatomy of a candlestick because it is very important that you understand where a candle opens and closes. And I mean, I'm always surprised with how many people don't or aren't really familiar with that because it's literally like it's how the candle is made. And if you know how a candle is made, you can start to isolate the things that it does, right? So we have a swing high here, right? How do I know it's a swing high? I look left, I look right. Candle 2 is higher than candle 1 and 3, right? We close above, right? So that's what it looks like. Why it's important is we want to think of this, especially on the higher time frame, as kind of like the breadcrumbs that the institutions leave behind, right? Um, we call this displacement, right? A very large move above a level that signifies to us that the market makers or the institutions or the banks, right, want to continue to move this higher, right? So as you can see, we move higher, right? And then we get what we call a sweep. A sweep is when we take out a swing high, but we do not close above it, right? We only wick. We stab above it. We do not close above it, right? And we view this as a kind of like a weakness Mic disconnected. Anyways, we view it as a weakness in price that kind of signifies to us not necessarily that price will reverse, but that it will either retrace or reverse. And the answer to which one it will be, the context of the rest of the chart should answer that for you, right? If we're in an uptrend, then I would more than likely be expecting a retracement, not a full-on reversal, right? So we have a sweep here. Let me actually annotate this one as well. So we're going to call it MSB for short, right? Market structure break, MSB. Okay. Now, another reason why market structure breaks are kind of that they give us a very important pieces of information is that after we get a market structure break, what we can start to tell ourselves is if there was a market structure break, then high probability IRL, aka fair value gaps, are created, right? So this market structure break has two fair value gaps in it. Both of these fair value gaps are to be considered as high probability. High probability in the sense that um, there's a high probability that they are likely to support price continuing higher, right? Which we can definitely see that both of these fair value gaps were respected, right? Respected meaning that they were not closed below, right? There was no inversion, right? So we stab into both of them. Stabs are okay. Um, there's a common saying for those who are very familiar with trading for value gaps, and that's the wicks do the damage, but the bodies tell the story, right? The bodies close inside the fair value gap, signifying support, signifying that we're good to move higher. And even if, right, even if you were still skeptical of whether or not that this would provide support for higher, um, you could just wait for this inversion, right? We hit a key level, you wait for an inversion, we invert here. This candle and this candle are your trading candles into this ERL, right? Let's just save this real quick. Let's make it a little bit more clean. Okay, so as you can see, both of these fair value gaps are high probability because of this market structure break, right? We can expect to move lower, retrace lower because number one, we've taken ERL, right? And for those of you that were here the other day, from ERL we go to IRL, right? We have a reversal candle, we have a closure back inside of candle one's range, and then we get a big move lower, right? And it ends up being a retracement that moves us higher, right? So that's one example. Let's keep going. And if you guys have any questions, feel free to just blurt them out. So we'll do an exercise here that I also recommend that you guys do on your own. Weekly Bitcoin chart. And what we're going to do is we're going to wait, right? And look, we're just going to map out every single time that we get high probability IRL created, right? So let's see, guys. Is this a market structure break or is it a sweep? Who can tell me, if anybody? This high right here, right? Okay, break, absolutely. Perfect. So yeah, we did get a market structure break here, right? And then we create IRL. Now, again, we can draw out all the fair value gaps that we want, but if there are no context validating the significance of said fair value gap, then that's where we start to fall in line with we're just pattern traders, we're not really trading the significant movements, right? Which again, when we see an ERL get blasted by like this, that's a good sign, that when we come back to these fair value gaps, they're likely to provide us with good support or good entry opportunities, right? So let's keep going. Let's keep watching price together. Right, and this will happen sometimes where fair value gaps just get left behind and we create new ones, right? And that's completely fine. Kind of take note as well, if you guys were here for the other one, take note of it any time that we take out a candle one and it starts kind of looking like a swing point is going to be forming, much like what we did here, right? There's that candle 3, there's that candle 4, right? So that would have been a nice entry opportunity. And what did we get here? Market structure break or sweep, guys? We'll annotate this one. Very nice. Market structure break indeed. And part of the reason why we're doing this exercise is because I want you guys to see, like, I'm not handing out any bullshit here. Like, all of this shit is very practical. I've spent a lot of time on the charts testing um, to find anything that's reliable, anything that's simple and reliable that I can add to my arsenal, right? So we have a market structure break. Therefore, this IRL is high probability, right? So what would we be looking for to take place in high probability IRL? We would be looking for potential candle close back into candle 1, right? We are looking for price to move back into ERL, right? Now, I'm not usually just buying these blindly. Um, I'm usually looking for confirmation on the paired time frame, which would be the 4 hour. We would kind of be waiting for that inversion to take place, right? Um, for those of you that were here for the market maker stuff, market maker model stuff, could see that as our original consolidation, accumulation, manipulation, and we should expect distribution. Okay, but we're not going to go too much into the execution stuff today. We're going to stay on the weekly. Um, and we're just going to watch. We're not even going to paper trade or nothing, okay? We just want to study what price is doing at these levels, right? And so let's see if we get that close inside. We get it closed just below. Doesn't make it invalid, it just makes it not as high probability. If it would have closed back inside candle 1, I would be willing to risk more size in candle 3. Um, but yeah, so candle 3 gives a little decent move, right? And now at this point, I would start to expect that we're moving into that ERL because we're keying off of what? A high probability fair value gap. Why is it high probability? Because of the market structure break, right? Gives it more significance. It's not just a fair value gap, it's a fair value gap that broke past a high with strength, right? And then there we can see, boom, ERL's tagged. Now, my job here, I'm not taking any trades. I'm already out of my long position up here, right? My my goal here now is to ask myself, okay, what are we gonna do here at this ERL, right? Because it's a key level. High time frame, weekly, swing high. That is a key level. So are we gonna close above it or are we gonna close below it? Now, this one's a little bit more tricky. We get a market structure break or do we get a sweep here? And while you're thinking that or while you're answering what we have here, I want you to think about the strength of a market structure break and the strength of a sweep and how they can vary. Okay, we got a couple answering sweep. Okay, so let me just quickly write the bare definition of each, right? When price closes above an ERL, or we'll put above slash below. I mean, that's a good strategy right there. You change your choice after I say it. I mean, there you go. You're always gonna win. A sweep is when price closes back inside ERL. Okay? So I want you to think about these definitions and I want you to look very carefully of what's happening here. Yeah, I'm not gonna lie, the reverse trade is that's funny because everybody's been there. If you guys have never reversed a trade because you lost and you're like, nah, it's probably going the other way, and it just takes you out. It's like the worst fucking feature that they have, in my opinion. All right, so if you want to change your answer, now's the time to change it. If you want to keep it, and keep it, but read those definitions. They're very simple, and ask yourself, which criteria is happening here? Okay, no takers. All right, cool. So the correct answer, let's see. All right, see Jake. Okay, John. All right, cool. So the correct answer is market structure break, and I can totally see why you guys answered sweep because it just barely, right? Just by a fucking hair, barely closes above that ERL, right? Now, like I mentioned before I gave the answer, I want you to think about the strength relatively, right? Like what I mean by that is like let's go all the way back here, right? Look at this market structure break. That is fucking massive, right? That's a huge market structure break, right? It's not just any rinky-dink candle, it's a god candle, as we like to call it, right? So when we get something like that that's so strong, I'm usually of the opinion that, okay, this is a real fucking move here. If we come back into any of these fair value gaps, I'm heavily favoring them. I'm willing to risk more. I'm willing to put more chips on the table if we have a move like that, right? Look at this market structure break. Very strong, right? Not even just one candle close above it, but two, right? This one was one, two, three, four. Got four consecutive green candle closes above a swing high versus two, and now only one, right? So I want you guys to kind of conceptualize this is a form of exhaustion and a form of pullback on the side of the institutions and the banks, right? That these are the little footsteps, the little breadcrumbs that they leave behind, right? Like, hey, we last time we had a market structure break, it was four candles that closed significantly higher. The time before that, it was two candles, still closed significantly higher. This time, only one candle and not significantly higher, barely higher. So that doesn't necessarily mean that this IRL isn't high probability, but it's definitely not as high probability as the ones before because again, the way that the thing that separates us from being just pattern traders is the context that we bake into the price signatures that we're using, right? And the context is, hey, this time we just closed above it fucking limp, right? Barely anything. So even still though, the IRL that gets created is still high probability, right? Now, I'm going to be a little bit more modest with my sizing here, but I'm still going to take the trade, okay? So again, we're not necessarily going to paper trade this time around. You could do it on your own time if you want to work on your execution, but today we're just kind of focusing in on this concept, right? So we tag that level, right? So after we hit IRL, where should price go, guys? To ERL. Very nice. Perfect. So we have our bias, price to go higher. What would we like to see to make this high probability? A close back inside candle 1, and then we would be mainly looking to trade candle 3 and maybe candle 4. So let's see how we close. Cool. What candle formation is this, guys? Who can tell me? I'm gonna start giving away prizes of my own to people that can answer. Um, no, I'm not asking if it's a market structure break or a sweep. What I'm asking is what candle formation is this? Is this a continuation candle, a reversal candle, or a consolidation candle? Which if you don't remember, that's fine. Okay, cool. Uh, All right, cool. I'm making sure you guys remember. I'm still making sure that all of that is fresh in your mind because you can see, right, that we're blending the concepts together to build a much stronger thesis. Well, what's gonna make you guys want to buy more? Yo, Sneak, I feel like you should really buy this, dude, because we just hit a fair value gap. Or Yo, John, I really think that you should consider longs on Bitcoin because we just put a reversal candle in a bullish key level. We closed back inside candle 1, right? We printed that reversal candle, and now we're starting to move to ERL. One thesis sounds a lot stronger than the other, right? And it's because it is. We're baking in that context. Yeah. Yeah, so as we can see, right, candle 3 and candle 4, we should expect to do the job to get us there. Candle 3 gives us a nice little move. Not really though. It's not the one I would be mainly interested in. Let's see if candle 4 can do it. Candle 4 gives us a decent move. It's candle 5 that gets us there. Which usually it's candle 3 or 4, right? Here it was candle 4. Here it was candle 5. But nevertheless, we're still doing that same thing of we're isolating the information. We're only really focused on candle 3, 4, or 5. After that, we're not really we're looking for the next setup after that, so to speak. So now that's done, right? And again, think about what you're able to do here for 1, 2, 3 weeks. You're only looking for longs. You've eliminated uh, a lot of potential mistakes of going short just by having this simple framework, right? So let's continue. All right. So what do we get here, guys? Market structure break or sweep? Sweet. Very nice. Sweet sweep. Right? We closed back inside of the ERL with a reversal candle, right? How do I know that this is a reversal candle? Strong wick at a key level, right? So now when when we get something like this, I automatically become of the opinion that at the bare minimum, I'm expecting a retracement. And we can trade retracements. That's fine. Um, I don't think that it's very high probability, or I won't say it's not high probability, but um, just straight up taking it off of that, I wouldn't be looking for any swings, we'll say, right? But once we get that sweep, it's very high probability that we get some form of retracement or reversal, especially when we have a reversal candle that did what? Closed back inside, oh, wrong one. Closed back inside candle 1, swept an ERL, and closed back inside, right? So candle 3, candle 4, candle 5, I'm potentially looking to see if they move lower, as well as I'm paying attention to, are we going to get a market structure break now lower, right? At this low or this low. So let's see what happens. There's that candle 3. And what did we get here, guys? Market structure break or sweep on this one right here? Very nice. You guys are on the ball today. Very good. Market structure break indeed. So let's say let's say me and Jake were kind of talking about, yeah, man, this bull market's been really fucking nice, bro. Like it's so easy. And then, you know, I'm like, yeah, but I maybe think that it's probably coming to the end because this signature that we have here happens all the time, anytime a bull market or a bear market is going to end, which is where we get a sweep, right? And this one's really nice because we have that candle 2 close back into candle 1, and we got that reversal candle, right? So this is a really solid one. And then we get a market structure break lower, confirming what happened up here being significant, right? Now, we didn't get any IRL created, but order blocks are a form of internal range liquidity. That's why, I'm not always labeling fair value gaps as IRL because there's a lot of different kinds of IRLs. There's breakers, there's order blocks, right? There's inversions. There's a lot of forms of internal range liquidity. Now, we've only briefly talked about order blocks here, but maybe in the next stream we'll go over them a little bit more. But take my word for it, this is a high probability order block because these are the up close candles before they down move after a sweep and reversal and a market structure break. So instead of using a high probability fair value gap, we're using a high probability order block. Okay. So then price moves up, taps it, moves into it with a little bit more strength. And then what are we looking for to take place in there? Candle 1, high, gets taken out. Candle 2 closes back inside candle 1's range. And then we would look to be trading candle 3, 4, or 5. Okay, we're going to mark out the ERL here because that's where price should be headed. So we close back inside, right? So there's that candle 3, right? Candle 1, candle 2, candle 3. And candle 3 takes out that ERL, right? Here we get a market structure break and high probability IRL created. Here, see, maybe we might create another fair value gap. Yep, here. So in the case where there's two like this, typically I'm using the first one that gets hit. Now there's some people that they rather wait for the second one or the first one, sorry, to get hit is a higher probability tactic for those of you that really want to have like a high win rate. Me personally, I'm a fucking fiend. I'll just take the earliest thing that's given to me. So I would be waiting for a move back into there. I'd be patient here. There we go. We get a move into it. What am I looking for? Same thing. Candle 2 to close back inside candle 1's range after hitting a key level. There it is. Look at candle 3 expanding lower into these ERLs, right? Relative equal lows. Okay, price takes it out. And then we get a sweep, right? Once again, anytime we get a sweep, doesn't matter if it's up here or down here, I can use the same concept the exact same way. We have a reversal candle, right? We closed back inside candle 1. So I would expect either candle 3, 4, or 5 to provide us expansion higher into the IRL, right? So there's candle 3, there's candle 4, Bears candle 5, which usually doesn't happen too often, where we get three consolidation candles back to back. But as we talked about last time, anytime we see multiple consolidation candles building up, we can start to anticipate a very strong move, right? So let's see if this will be candle 2, candle 3. Okay, we close back inside, so I'm looking to trade candle 3, 4, and potentially 5, right? And there it goes. There's that big move that we're looking for, right? Back into IRL, inversed it, right? And now we're going higher, right? We got this market structure break here. Therefore, all of these IRLs going to be high probability. Now, I want you guys to really spend some time taking a look and going on your own charts and drawing out fair value gaps and swing highs and swing lows, because even though it may seem like a very mundane task, if I ask you to look in this leg and how many fair value gaps are in there, I would be willing to bet that at least one person in here would say that there's one fair value gap, right? Which would be this one. Yep. How did I know? John, I'm sorry that it had to be you, but there's actually two fair value gaps in here. And it's very, very small, right? Check it out. I had to really zoom in for you to see it. And I don't blame you for not having eagle eyes, John, but um, if you want to get really good at seeing them, even when there's not that pertinent, uh, even though they're not jumping out at the screen to you, you have to spend some time and draw them. And in this example, right, price probably going to move back down. Okay, there it is. All right, starts moving back down. Okay, then we move into this fair value gap. Then what are we looking for? A potential close back into candle 1, and we want to see this fair value gap respected. Right? Okay, we got a very small close outside of candle 1, just makes it not as high probability. Let's look for candle 3 and candle 4 to potentially form, because we do have a reversal candle in a high probability fair value gap here. So let's see. Okay, there we go. There's that candle 3. Let's say that we were being a little bit cautious, so we're waiting for candle 4 up into this ERL, right? Because from IRL to ERL, there you go. Money printer. Yep, or to have a big screen. If you have a big screen, you'll probably see them a little bit easier, right? So then once again, we just keep going with that same flow of we're looking for those market structure breaks and sweeps uh, to validate our price signatures, so that we're not just trading. You know, if it were that easy and we could just trade all of these price signatures like that, then we would just automate it and everybody would already be a millionaire. But we have to build that context ourselves, right? So as you can see, it's very, very reliable to kind of trade with this perspective and have some sort of overarching big picture, so that you can trade inside of these types of weeks, which is exactly what we did recently, right? We framed it on the weekly, right? We got our why is this high probability IRL? Because we had a market structure break, right? Why was I so confident in the shorts? Because we have a high probability for value gap coming off of a market structure break. We have a candle 2 closure back inside of candle 1's range, and then we take that third weekly candle, right? And then we drop down to the daily, and there was our setup, right? Price and time are fractal, so we can use these same concepts on all of the different time frames. Doesn't matter if you're a swing trader, a scalper, or whatever. They're all going to be applicable. So as you can see, we get another reversal candle, candle closure back into candle 1, and we're in high probability because we're in the weekly candle. And yeah, one of the things that was very important to me early on that I heard is if the monthly is clear, then the weekly will be clear. If the weekly is clear, then the daily will be clear. If you can even just do weekly and daily and they're clear, you're gonna position yourself in moves where it's really hard to lose, right? Because inside of candle three, we've had one, two, three, four. We've had four down close candles where those days were just very, very opportunistic for shorts, right? Um, you could have, of course, gotten in on that candle too, but like I said, that's a little bit more advanced, and I think it's really important to just focus on candle 3, 4, and 5 in the beginning, specifically candle 3. Um, but yeah, so that's pretty much it for the market structure break and sweep segment. Like I said, for Bitcoin, I'm really just watching to see if we can close over or back below. Um, Mainly to see if we can close back inside here. Because if we close back inside here, then I'm gonna start flipping to the opinion that we're still good for shorts. Probably, for to this low, and potentially all the way down here, right? For that kind of like max pain scenario for now. But yeah, any questions or any last minute requests before we go ahead and wrap this up? Speak now or forever hold your peace. All right, cool. All right, man. Well, appreciate you guys turning up as always. Hope you guys are still getting a lot of value on this. Always feel free to send me any annotations you guys may have. If you want some feedback, you want some critiques, I got you. Yep. Thank you guys. We'll see you guys tomorrow. Be safe. No crazy trades. If you guys find yourself in a losing position, I hope that my voice comes out in your head, tells you to just close it, log off, bro. Yep, and do not reverse trade. There you go. Kick-Ass has the right idea. All right then, fellas. I'm gonna go ahead and end it up here, and yeah, we'll get those the last three live streams in the archive if anybody wants to review. Yep. Good night, guys. Have a good rest of your day or night.